Thank you for watching Energy Views by Petrochemical Strategies. Let's look at global energy markets. Over the past week, global crude prices have shown a little easing. Brent is hovering around the $100 per barrel mark, while WTI has been trading solidly in the 90s. The bottom line on this chart is the Cushing, Oklahoma crude oil futures price published by the U.S. Energy Information Administration through the end of last week. The top two lines are the New York Harbor prices for RBOB and diesel. Since the last report, WTI crude futures have come off roughly $16 per barrel. Refined products have come off even more, which you can see in the section circled in red. What tells the story here is the 3-2-1 crack. That is the difference between the price of 3 barrels of WTI and the value of 2 barrels of gasoline and 1 barrel of diesel. Using the data from the EIA, you can see the 3-to-1 crack spread since the beginning of this year. The crack spread took a clear downward direction over the past week, even dropping below $40 per barrel for the first time since April 13th. But don't despair. A $40 per barrel crack spread is great news for the industry. And if you didn't catch it, ExxonMobil reported its first quarter earnings of $5.5 billion in April. And despite the lingering effects of the war in Ukraine and a reduction in global oil prices, earnings should be strong for ExxonMobil and the rest of the crude oil and refined products industry in the second quarter. As I mentioned last week, I'm watching retail gasoline prices and crude forward curves to see if there's any sense we can make of this market. The EIA reported that U.S. gasoline prices were down last week to $4.65 per gallon, which was a reduction of 12.5 cents per gallon. The trend downward continues. Crude futures continue their backwardation through the end of this year. So could this mean we are over the hump? Well, let's keep watching. Let's turn our attention now to natural gas. Over the past month, U.S. natural gas prices have declined. This has been attributed to the outage at the Freeport LNG export terminal. Without these exports, supply and demand has been brought back into balance in the U.S. Over the past week, we have seen U.S. natural gas prices come off just a little bit, but still hovering in that $6 to mid $6 per MMBTU range. International natural gas prices increased last week, with the largest increases coming in Europe. The greatest uncertainty in the global natural gas market is what will happen to European industries if the natural gas pipelines from Russia are shut down and those European industries become dependent on international LPG shipments. This is a huge pricing issue, but even a potentially greater supply chain crisis. Let's turn our attention to petrochemical feedstocks, or NGLs. According to the Natural Gas Weekly Update published by the EIA, natural gas liquids prices were mostly following their energy counterparts last week. Weekly average ethane was down 17%, which outpaced the decline in natural gas, but was directionally similar and of the same order of magnitude. Weekly average natural gasoline, which is the C5 plus cut, fell 3%, which matched the decline in Brent crude oil. Propane, normal butane, and isobutane prices declined during that same period of time. Let's wrap up looking at petrochemicals. There is an interesting phenomenon happening right now in the domestic petrochemical market. Futures for key feedstocks, ethane, propane, and butane, have a weak backwardation. However, futures for key olefins, ethylene and propylene, have a weak contango structure. Now, this doesn't mean anything unless you lock in your feedstocks and product prices today, but it sends the message that the sentiment for petrochemicals is good, well, at least in the US. As I mentioned last week, I am working on a petrochemical model which can be used to make sense of the global petrochemical markets. Expect more information in the coming weeks. Thank you for watching Energy Views presented by Petrochemical Strategies. My name is Robert Sawchuk, and I will see you next time.